Good evening, everyone. My name is Chris Cooper, known as the Channel Guy Trader, and I'm reporting to you live from Wall Street Trading's Miami office down in sunny South Florida. Today's date is Tuesday, August the 27th, 2013, and here is today's After the Bell Market Summary brought to you by WallStreetTrading.com. Just a quick reminder before we get into the analysis here, if you have not been to the website yet, go check it out. There's a lot of free educational information on the site. At the same time, if you're interested in taking our active traders course or joining our prop firm, you can contact me at ccooper at wallstreettrading.com, and the site has more information on that. Aside from that, let's go ahead and get into the analysis here. We had a ugly day in the market today, with clearly the sellers being in control, as every rally that we attempted to make got sold pretty hard. Starting off with the market, though, the Dow closed down 170 points, the Nasdaq closed down 79 points, the S&P 500 closed down 26 points. If we take a look at the breadth on the market, we had 5,264 issues declining on the NYSE, Nasdaq, and the AMEX. We had 994 issues advancing on the NYSE, Nasdaq, and the AMEX. Therefore, breadth was definitely in favor of the bears, a little over a 5-to-1 ratio there. The hardest hit sector looks like, was everywhere. All the sectors got hit pretty hard, but I'm seeing a lot of heavy red, over 3% down, 2.5% down in the financial sector, followed by the tech sector, and then I would say the basic materials and the healthcare. But overall, in general, the market got smacked down pretty hard today. We're looking at everything being down close to 1.5, 2% down here across the board. So let's go ahead and break down the charts. We're going to take a look at everything today. We also had some decent action in crude oil. If you guys have been paying attention to these videos, we've been talking about looking for crude oil to make a big breakout by the start of the third quarter. That's exactly what's happening here. So we'll take a look at that chart here shortly, and we'll break down some markets, and we'll go over the charts, and we'll go from there. So starting off with the SPY, I have it zoomed out from the start because I want to show you guys this key trend line that I'm tracking from the gap up that we had at the start of the year. I had the green arrows right there highlighting the area that you need to be looking at on the trend line. From those lows, connect that little low, made that higher pivot low. Right, then we had the little higher pivot low. I just took the body of the candle right there. And now we're going to be coming to that trend line, which will be around 160.75, or just call it 162. 162 also lines up with this key uh, resistance area, which should now act as some type of support from the gap down that we had here. Right, prior resistance becomes support. So 162 is definitely going to be a very interesting area to watch on the SPY. We also have the 100-day simple moving average right here that we're barely holding onto right now. The 100-day simple moving average, exponential and simple moving average there. All right, so if we break today's lows, the next target I would assume to be hit, of course, is a 162 level. And if we don't hold 162, the level that you want to watch, let me go ahead and zoom the charts in now. The level that you want to watch if we do not hold 162 would be next level 160. Now, I was talking about before how we had this nice, well, I wouldn't even say nice, again, we had this fast move up in price action that was pretty sloppy from the gap up. So this really was, there really wasn't any conviction on this move up that we had from the June 24th lows to the highs that we made back here around, mid-July. Why? Because, just the action was pretty thin, pretty light, choppy. What does that mean? That means we could easily come all the way right back down the same way that we went up like that. All right, and that could be something to watch out for. We have a possible head and shoulders pattern here on the daily chart, with the neckline being around 157. You have your left shoulder, you have your head, and it's kind of forming the trying to form the little neckline for the right shoulder. We'll see. Don't want to get too ahead of ourselves, of course, but definitely something to keep in mind. You can see a little bit cleaner, really, on the weekly chart. Let me bring this over to you guys here real quick. The weekly and the monthly chart. You have your monthly right here. All right, then you have your weekly chart. You have your possible left shoulder, your head, and they can form a right shoulder. This is, of course, this is just a little forecast of a scenario that could play out. But keep that in mind. Keep those levels on watch. As far as resistance goes, if we could get back above today's opening price of around 164.38, then you want to maybe look for this 165 area and then 166. All right, let's go ahead and take a look at the ES, the S&P 500, the E-minis, which is what we use in our live intraday chat room, mywallstreettv.com, to track these stocks on an intraday basis and to trade these stocks here. So let's go ahead and take a look at the ES. The ES is breaking below all this action right here. We actually have some nice consolidation right here. Go ahead and highlight that for you guys in the chart. All right, and we did not hold above it, so we're coming right back from that consolidation. The ES looks like it has an opportunity to hit 1607. Believe it or not, we have a we have a nice wide range sell candle here with a close below last week's pivot. All right, so we do have one confirmation. We do have one close, all right, below this key level here. Now we need a confirmation close. What is that key level? Let me give it to you guys right now. 1 second. That key level is 1634. So unless we get back above 1634 and hold above 1634 tomorrow, you want to be a seller of rallies underneath that level. All right. Again, the target that we're looking for is 1607 right here. We break below 1607. We'll be looking for back down towards 1600. All right, we still have some more room to get there, so we won't even talk about those levels quite yet. If we break back above 1634, you want to look for 1640, 1650. Actually, some decent levels that we gave out this morning in the chat room here. All right, to our traders, we told everybody in the room this morning that if the market was to hold below 1638, you want to get short. And you can see from my prior analysis where all these consolidations come from and why these levels are very key and very important. So you can see going into today's session here, excuse me, you guys know I talk a little bit fast a bit. So going into today's session, we chopped around. We weren't a seller on the open. We told the guys look for a bounce in the open just for the fact that we were extended right here. We did get that bounce like we expected, but then they sold it right back down. And once we got that hold below 1638, they sold us all the way down to 1626, and we stopped exactly at our next level. And we have all these levels marked out. I don't show everybody the charts in the room with my my analysis levels and everything, but I do write down R1, R2, R3, S1, S2, S3. We get those out in the room and we do a little bit of pre-market analysis. So if you guys have not been to the room yet, check it out. mywallstreettv.com. The password to log in is SMART. And you do get a 7-day free trials, ladies and gentlemen. If you want to get more than 7 days, you can just send me an email and we can make that happen for you to check it out longer. And you can see a lot of the trades that we've done on our Facebook company page. So anyways, back to the ES. I gave you guys the levels. Let's keep this show on the road, starting off now with the NQ, the NASDAQ futures. Let's go ahead and take a look at this. I discussed how the NASDAQ futures is trading in my channel analysis here, and how we have some key levels that I'm watching, and how we have not been able to really kind of hold this level that I'm watching, and that level is this key trend line right here. You can see that trend line was respected right here, and you can see we're trading pretty much in this range. And this again is like a little upward rising channel. All right, and it looks like also looks like a little head and shoulders pattern and the angle. So we definitely got to watch this technology sector. If we break below today's lows, look for the Nasdaq to get smacked down pretty hard, is what I'm forecasting. So we'll see how we end up going into tomorrow's open. But if we take a look at the triple Qs, which is the ETF for pretty much the Nasdaq index ETF that we use to track the tech stocks and everything intraday. The triple Qs here. All right, we broke and closed below the 75.30 level. All right, remember, if we break below 75 and hold, which was this consolidation we had over here before we took off to the top side and made new 52-week highs, we break below that 75 level, the next level to watch is going to be down here around 74.25, and this whole area would act as an air pocket if we start holding below that 75 level. So keep that on watch. All right, we also have some key trend lines that we're watching on this chart. If you take a look at that top black trend line at the top of the screen, or the middle of the screen, all right, you can see how it drags along. You can see how when we broke above it, that's when we got that big breakout in price. Therefore, we're going to be watching that key trend line as well, and that key trend line comes in play around 73.90, call it 74, which also lines up with this little area, not at 74, but around 73.50, right underneath 74 from this prior resistance, which should now act as support on this side. So that's going to be a level to watch as a potential target if we start holding below 75. Then we also have this level right here around 74.23, which comes from these two levels right here. So there is a gap. Let me go ahead and mark that gap for everybody. I got to mark it for myself as well. And you can see there is a gap fill on the triple Qs between 73.55 and 74.23. That 73.55 gap fill may be the target for the market here in the short term. You can see volume increase today, and volume has been increasing while we've been kind of chopping around here, as the market's been trying to catch a bid, but it doesn't look like it's going to catch a bid in the short term here. Thanks to Syria and all this other action going on, it's causing some fear in the market and the VIX to rise, which we'll take a look at the VIX here shortly. The Russell 2000 was really the indicator of showing us there was some weakness, just for the fact we had a nice little decent pattern here. We have a nice little upward channel. You can see this point of reference right here, this point of reference, these points of reference give us this key trend line to draw. And if you take that parallel trend line and you connect to this little pivot that we made right here before we had this nice little run up, you now have a channel. Notice how the slope of the trend line matches up to the slope of the trend line at the bottom trend line that we have right here from these little pivots. And amazing how it happens. I guess it's just because, of course, the market is symmetrical, and it's just crazy how this technical analysis stuff works. But anyway, we're going to be watching this key 99.50 level, prior resistance right here. We broke out, should act as support. So 99.54 would definitely be a key area to watch on the IWM. If we break above, if we break below 99.54, we have some lower levels to watch around 98, 97.50, but we'll talk about those levels when we get there. The IWM is going to trigger short tomorrow if we break below its 157 level, which lines up with today's lows and the lows that we made last week on Monday. So the markets are getting very interesting now, and volatility is picking up. This is the best time to trade and catch those nice wide range moves. So got to be on top of your game. If you take a look at the Dow Jones, which I really don't look at that much, but I'll take a look at the YM, the Dow Jones futures, if anything. The Dow Jones futures is going to have some support down here around 14,396. And you can see this one even got a nice little close below that little pivot that it made right here. This little short pop-up that got smacked right back down. Holding it below 14,800 on the Dow. Should take us down towards 14,600 tomorrow. So we could be forecasting, if we have another sell day tomorrow, we could be forecasting a move, a 200-point move tomorrow. And I'm also marking this chart up, and you can see we have this little consolidation right here. That could be a little area for support, 14,000 on the Dow. Whoa, if that happens, it could be very exciting. A lot of opportunity for some money-making trades. Let's go and take a look at that volatility index. I've talked about the volatility index getting back above 16 could be very serious to watch. All right, if you take a look at the consolidation that we had back here in November, all this price action right here, went below it, got back above it. There's been a lot of price action between the 16 and 19 range. You can see every time we try to get above 19, they smacked it back down. All right, got above it, smacked it right back down, and now we're going up there for our, let's see here, 1, 2, 3, 4, 5, 6. This is going to be the 7th attempt that the VIX tries to get back above 16. Well, tries to trade above 16. If it holds above 16 and breaks above 19, all right, it could get pretty serious here. All right, again, we don't know what's going on over there in Syria. We do know it's causing some fear in the market. Hell, we don't know that they could probably launch an attack overnight when we're sleeping, and the Dow and everything opens up down a lot. Who knows? That's why I think people are buying some protection for their portfolios. But another thing that I'm noticing here, which again I've been talking about this for a while, is the dollar weakness. And the dollar, discussed this in yesterday's after the bell market summary video. The dollar not being able to break back above 81.62 would be bearish, as that's kind of like a little choppy back test area that is trying to get back above. And you can see today it failed and was not able to get back above that level here. So off of this down move that we had in the dollar, this sideways action, we got that breakdown. They try to catch a bid at, well, it didn't try, but it caught a bid at, say, 81. Couldn't stay above this 81.62, came right back down, tried to get back above the level, couldn't stay above it, came right back down. If the dollar breaks below 81, look for, I would say, gold and some of these physical assets, commodity sector to catch a bid. And this is what we're looking for. And keep an eye on these companies that do a lot of business overseas that definitely get affected by the price action of the dollar, like these heavy industrial companies, Caterpillar, these equipment companies, things like that. The dollar's target's down here towards 79.50. So since we're talking about the dollar, let's go ahead and take a look at the euro, because the dollar's going down. Obviously, the euro dollar is going to be breaking up, and it's trying to get back above that 134 level. And keep an eye on the euro, folks, in the next couple of days here. Again, we don't track the euro, but we don't trade the euro, but we do track it to watch the price action and how it relates to other asset classes and the other currencies. And if the dollar's to break that 81 level, you can expect the euro to break out over this 134 level. If that happens, you could trade the euro futures, the /6E contract, which trades pretty well, trades just like the E-minis. It's $50 a point, 12.50 a tick, so it's actually pretty good. And you can see at the same time we have a nice little upward channel here in the euro. So keep an eye on the euro, keep an eye on the dollar, expecting some big currency, expecting some big price action in this currency market pretty soon if that dollar breaks down, the euro breaks out, and the VIX picks up. So it's getting pretty interesting, guys. Got to be on top of your game here. What else? Let's take a look at the commodities real quick, starting off with crude oil, which has been trading pretty strong. All right, crude oil was up $3.17 a day, had that big breakout. We discussed how this pattern right here is indicative of a move higher. You have a nice little upward price action movement here, sideways consolidation. And then today we got that breakout and crude traded above 109. Now let me drag over the weekly and monthly charts here because we've been talking again about this crude oil breaking out in the third quarter. And we've been talking about this since the start of the year, and we got that breakout here as the symmetrical triangle pattern was giving us a heads up. And now that everything's finally coming to fruition here, we're going to be looking for crude oil to get the next trigger on crude oil. If this crude breaks over 110.79, call it 111. The next target on crude oil is going to be up towards 115. It can get very crazy here. Expect those gas prices to rise at the pump, and expect yourself to not be able to buy that Dunkin' Donuts or that Starbucks coffee. Well, you may be able to afford the Dunkin' Donuts coffee or the racetrack coffee, but you may not be able to afford that Starbucks coffee anymore. All right, anyways, that's a little joke for you guys. Crude oil looks to go higher. Keep an eye on that. If you want to trade crude oil, you can do it by buying calls, selling puts against the lower end of the range. You can also buy crude oil futures. All right, and if you're looking for a place to trade futures, you can contact me as well at askchrishetrades@gmail.com, my other email address, and I could definitely point you in the right direction. What else here? USO, let's go and take a look at USO. USO, of course, has the same pattern. All right, USO, upward price movement, sideways consolidation, and looks to go high as long as it holds above 38.50. Let's take a look at that gold. How's the gold doing? Gold was up $22.60. Again, I think a lot of this price action in gold has to be, well, because it sold off a lot, one, and then because of that dollar weakness we have, and then because of uncertainty, so that's causing a nice bid in gold. When gold's going up like this on uncertainty, you really want to be invested in the physical metal, whether it be the GLD or you're buying the actual commodity asset, or in other words, you don't really want to play it via the gold miners, even though sometimes the gold miners will go up with gold if gold's being bought on fear. All right, but gold futures looks pretty good. You take a look at the GDX. The GDX has been on a nice run, and it got smacked down today. And here goes what I was talking about right now. If gold's trading higher, well, then why would the gold miners be trading lower? Well, it's because people want to actually own the physical metal, not companies that have to go in the ground and try to dig it out. So look for gold, look for the GDX to pull back a bit. It did have a nice little ABC move up here, which of course the C did not get completed. But this may come back down, put some type of a little higher pivot low to work off of these levels right here, and then that's a higher pivot low that you want to buy, and see if you could get a nice little move back up. All right, so that's something we're looking out for. Copper, let's go and take a look at copper futures. Again, going through a little bit of everything here to see how everything reacted today. Copper futures still having trouble breaking over the top side of this range. Again, we discussed this. Top of the range is 340 and 305, so you have a 35-cent range in copper. Nothing too crazy here. Of course, is copper strong, indicates good growth in the economy, stuff like that. What else? I think that's about it, guys. So let's go ahead and take a look at some stocks real quick. Obviously, every stock's going to look the same. Futures were down, so everything's going to look like it fell off a cliff. Apple gave back a lot today, down over 2.5%, down close to 3%, down $14.38. All right, Amazon, a stock that has not been able to really catch a bid since its earnings. This stock's getting smacked down. I'm gonna have a good level for you guys to buy in Amazon when it gets there. I think that's gonna be around 270. Well, not I think it's gonna be around 270 right here, which also lines up with the rising 200-day moving average. And if we break below 270, I have another good level to get you guys involved at around the top of this trend line from the break, which is going to be down here around 260. They do a little shakeout below the support level right here. Amazon, let's take a look at Google. All right, Google was the stock that we talked about yesterday. How if it breaks below 860, look for some selling pressure. All right, you have this little rally, move up. I'm sorry, move down, move back up. A little break of the range, held resistance, came right back down, and now the Google looks like it wants to break. If it breaks this little pivot right here of 847.32 that we made on June the 6th, look for this thing to come in towards, I would say 840, and then look for this maybe this 820 down here. Again, a lot of these stocks are looking like they're vulnerable for I wouldn't say a big sell, but a nice move down. IBM, this one has not been able to rally at all. This is a weak one. Therefore, if it was not able to rally, this is going to be the one that you want to hit. And take a look at what it's doing today. It's got smacked down below 184. Looks to go lower. Keep IBM on your radar tomorrow for a short. Some stocks that have been trading strong. Let's see how those traded today. GMCR with strong stock. Held up pretty well today. Still holding these nice little trending moving averages here. As long as it holds above 82, it'll be fine. Tesla got bought up today. Another characteristic of a strong stock. This morning, going into the chat room, we told the guys in the room, hey, if all the stocks that traded strong yesterday, you guys want to buy those up on the open. And that idea worked pretty well. You can see Tesla did pretty well. GMCR gave you a nice little move. Netflix, let's see what Netflix did today. Netflix gave you a nice little trade in the morning. If you take a look at the 15-minute chart, we'll actually take a look at the 5-minute chart. All right, gave you a nice little quick pop right here that you could have played if you're an active morning trader. But after that, it really just faded. Let's take a look at the banks. Of course, can't end the video here without taking a look at the banks. Goldman Sachs broke this little upward trend line right here. Little double top action. Doesn't look good. Looks like Goldman Sachs may pull back down towards 150. Let's see real quick. Bank of America. Just taking a look at some key banks here. Bank of America is still holding above 14. Bank of America is actually holding up pretty well, but if it breaks below 14 and holds, want to be looking for those lower 13s. JP Morgan has been showing relative weakness to the other banks, of course, because the London Well and all this other stuff going on in the company. And this one looks like it wants to hit the 200-day moving average right here around 49.5. Aside from that, folks, I would go through all the charts, but of course everything looks the same. We'll have some ideas in the room tomorrow. Make sure you make your way to the room, mywallstreettv.com. The password to log into the room is SMART. If you want to have a 7-day free trial, though, you have to make sure you go to the website and fill out the form on the right-hand side, wallstreettrading.com. It's been a long day, guys. Catch you guys tomorrow. Cheers.